So recently, I've got a lot of questions coming through that are asking me what exactly is going on in the markets right now. And specifically, they're asking why growth has slowed and movements have slowed. Well, I think this chart and more really answer some of those questions. And we'll be going through those today and going through some of the theories behind how these work and the mechanics of the markets. This is a really interesting video. And of course, we'll also have our analysis for the markets closed 9th of August, 2021. Stay tuned, guys. Okay, well, when we begin our analysis of course, markets closed the 9th of August 2021, where better place to start than the S&P 500 heat map? And I just want to remind people a few things here. So we saw Moderna continue to rise yesterday. The hype was real for that, and it has moved to all-time highs. The other thing I want to remind people, though, is just a few weeks ago, AMD was pushing incredibly heavily. In fact, it was only a few days ago, and now it has become not loved. So just remember, Moderna is most likely a pump and dump at this point because the retail community is out of control in it. They're also out of control in a whole bunch of others. We've got CLOV coming back. We've got SPCE coming back yesterday. That broke through a resistance. This has become what the market is. It's very similar to what happened in February before a little bit of a market pullback. Some stocks are going out of control, and it shows really this level of disregard, I guess, in some ways to the risk. So just be careful there in terms of what you're doing. Make sure you always practice good risk management when you're getting into these positions. And I know that sounds boring, but it's something that's very, very important to follow. So Tesla was up yesterday as well. We had Pfizer moving heavily. Some of the banks did okay, and everything else was pretty lackluster. If we go through the actual markets, you'll notice here in terms of indices, NASDAQ opened and was pretty much flatlining the whole day. S&P 500 and Dow did nothing, and IWM was slightly down. It rallied a little bit and then went down near the close. So there was really just specific sectors that were better than others. And of course, the biggest one was led by Moderna, IBB, the biotech industry. The healthcare industry did okay. And I mean, it was just completely boring, wasn't it, guys? It didn't really do much from a top-down perspective. Now, certain stocks moved a lot, but I think part of this is because we're going into this period of time. Remember, August, September, traditionally weak to sideways market months, and we've been discussing that quite a lot. We've also discussed this other chart for new time viewers, the last 20 years of NASDAQ returns. August, September tend to be down to flat to sideways, whatever you want to call it. Not really great months for specific index plays. So this is something that's very interesting, and we need to be aware of that. Now, why does this happen, some people ask? Well, first up, you need to understand that when earnings are over, that kind of hype, that anticipation, that optimism that's always in the markets, it goes away. And if optimism goes away, what does that tell us? It means that it's like buy the rumor, sell the fact. It's kind of like when you acquire anything. If you acquire something that you've been waiting for a long time, well, it's awesome when you get it. About 2 days later, some people feel buyer's remorse. Some people are like, oh, maybe I shouldn't have bought that. I mean, I remember I had that when I bought one of my watches once. I thought, oh, I need this watch. I got it. And I thought, was that really, I probably should have put that in stocks, yeah? That's usually the way you think about it, yeah? So Palantir, Baidu, Walt Disney, Airbnb, these are the earnings that I think are biggest this week. We've also got Coinbase after the close here on Tuesday. That's going to be a very interesting one. I'm sure people like Cathie Wood will be all over that. Very, very interested to see how they have done. But we're in earnings season. We've now gone through the biggest stocks, and that creates kind of like a lull after that fact. And that's partly why September is also quite weak in the markets. So let's take a look at the technicals and see what they're saying, because after all, that's the psychology of the market. We have dollar index, which has found an amazing weekly base here, and we know that it's been kind of coiling before the big peak breakout potential here at around 93.10. And this is the keys at level and key zone. Now we've got CPI and PPI news coming out, which we'll be talking later on through this video on this. And this is probably what's going to make or break the dollar index from moving up or down. That's going to be one of the key things that I'm looking at. And this is a very significant chart and well worth continuing to look at. Another thing that we've got is the US 10-year. So we said that at the start of this week, this is probably the most important chart for us to be watching. It actually closed above the previous resistances you'll notice yesterday. So this was the resistances, it closed above, it's pulling back a little bit now. But after such a close, you generally expect participation to come through. And the good thing is we have a kind of a zone that we expect the 10-year to go to, and that would be our usual downward trend line here. So if it did come back up to the 1.43, would not surprise me at all. That will put, of course, an increased pressure on things like the NASDAQ, on growth stocks, because high yield is not good for debt burdened companies. And it may also lead to the banks actually having an okay time. So watch this one, continue to follow it. That will be important. Now, conversely, if we have strong 10-year, what are we going to have here? Well, we're going to have weak bonds, and the bonds have started to come back down. I think 146 is the key zone here to be watching for buying pressure. We've got previous resistance, previous support, and a 50 exponential, and of course, this will be the zone that if bonds are going to bounce, I would hope they bounce around that area. Look for the smaller time frames to show you confirmations there. Now, what else has been happening? Well, there was some trickery for sure on silver and gold. And I think this is why it's really important to always have a stop loss in and always practice correct risk management, because look at what happened here. Gold got flogged and it sold straight from the 1762, which was the first support, and the second support was down here in the 1670s, and it went all the way there in only a few minutes. So it shows you kind of the manipulation that can go on in gold and silver. This is clearly what's happened here. And it's really important that you practice the right mismanagement. Are gold and silver tradable at this point? After such a move, in my experience, I generally stay clear of them for quite some period of time, and I wait to see more. I need to see structural formation. At this point, you're guessing which way it's going to go. I mean, will you always be slightly bullish on gold? Yes, you should always be slightly optimistic, but it can stay down for a lot of years. So be careful here, guys, because that's not the type of thing that you want to see. And you've got to now really wait for price action to show you the way. And that's the same on silver. We'll move over now to the stock market. We've got Tesla here, and Tesla's in a bit of a channeling range. So effectively, it's still stuck within the zone. If it breaks past 727, we expect quite a lot of strength, hopefully up to that 770, 780 area. And if it goes underneath this 690 zone, then we expect weakness down to something like the 660. It's not looking that great for Tesla, but at least it did 2% yesterday and it found some buyers. Now what you need is you need to go over StockTwits, you need to go over Hype Equity and other websites and make sure the retail crowd is coming along with you. The most important thing for these stocks right now is to get every single person buying calls, every single person putting the squeeze on and basically pushing the stock up together. That's what is pushing stocks at this time. That's very important that it does so, because it's not really, like, I guess you would say Wall Street heavily in the stock market at the moment. It seems to be retailers just trading specific stocks that have given you the best returns over the last couple of weeks. We move over to IWM, still stuck in the middle of the range. For anyone that doesn't know what this is, it's the Russell 2000, and basically it's the small cap companies. Often weakness is shown in the small cap companies. And at this point, I guess it's in the middle of nowhere, really. It's not really very easy to spot. It has continued to find some resistance around this 224 area. You can see long leg doji didn't even close underneath this point. If it did, at least then we'd have some decision. It looks like we didn't get that yesterday. Speaking of long leg dojis, check out the QQQ, the NASDAQ. Yep, nothing happened. We stayed within the range. So this was the long leg doji, and now we have another indecision candle coming through. It doesn't get more boring than that, guys. Unfortunately, we don't have a decision, but hopefully when we get a decision, which is a closure below or a closure above this range, we can actually start to find some direction here in the NASDAQ. What a boring day. There's no doubt about that. So one of the reasons that I guess we're seeing weakness in the market, or we're talking about neutralized returns, is this particular chart here. And this is the Dow Jones Transportation Average. And basically speaking, this is showing a weakness in the market when compared to something like the Dow Jones itself, or of course, when you compare it to the S&P 500 NASDAQ. It's broken through the 20 moving average, which is why it's now worth really discussing. And what this has done in the past is it's kind of preempted neutralizations of markets. So that's markets trading within range, markets trading slightly weaker, and markets just generally not having an incredibly explosive growth. Now, if this starts firing again, that's really important. But basically, this market or this particular index is worthwhile you you watching. Another thing that you'll want to watch is something like the NYSE Composite Index. This is again showing neutralized returns here. We can see we're in a massive trade range. And if this isn't going up and breaking through, it's showing a weakness in a certain section of the market. So really what both of these are showing us at this time is that this market is not necessarily going up on, I guess, great healthy market movements like it was coming out of the pandemic where everything was going great. Now we're slowing down. Now we're saying, okay, maybe this sector's not as good as we thought it was. Maybe this sector is as good as we thought it was. And there's this massive shift going on. And I think this is what's got a lot of economists, a lot of people worried in the markets. And I do take some stock in this. But again, what's it telling us? It's telling us there could be weakness throughout the rest of the market. Do we want to be agile and wary of that? Yes. If it starts to break down and we see the key signs on the major indices, such as the S&P 500, will we pay more attention to it? I would argue, yes, you will, because you know the other signs are there. We've discussed those. We've discussed the other indices that aren't looking so strong. So the key to everything in the markets really is to know what's there, to be an internal optimist really in the markets, but not to be stupid when you do see things turn around. If we see a break, let's say, under the 43.70, do we expect further weakness? Yes, we would, down to potentially as low as 42.50. I've talked to you guys about that case and why the weekly 20 is so important. Weekly 20 is, of course, mean reversion. Now, if we closed underneath the weekly 20, let's say we got underneath this on the S&P 500, where's the next stop? Well, it could certainly be as low as this 50. And you may say, well, that's too low, Tom. That doesn't make any sense. It would actually be relatively healthy for the market to have a decent pullback at this stage. So around a 10 to 20% pullback is okay within bull trends. Obviously, anything over 20% is considered a bear bust. But yeah, around that period is absolutely fine. And you do need, a healthy market needs 2 steps forward, 1 step back. And we need to be able to catch up with a lot of these smaller companies. And we want the whole market to be moving up rather than just a specific few areas or companies themselves. So it's something to watch. And the Dow Jones theory, if you want to read up on about it, you can do so. But part of the reason why I mentioned peaks and troughs and all those things is because we do follow a lot of the theories in that, but we just need to understand whether it's time to use them or whether it's time to ignore them. And at this stage, I think we're at a point where it's starting to become time to maybe don't ignore all of these weakness factors that are coming into the markets. Let's move over here to the Bitcoin markets and, of course, Ethereum markets. We'll start here with Ethereum. So Ethereum's hit another peak. Congratulations to people that have been in the coins recently. Amazing returns here. And it's finding a little bit of weakness. Do I think it will hold this point? I know there's a huge amount of calls that are on Ethereum. And I mean a huge amount. I think it's 40,000 plus open call positions. And I don't know if it will hold up actually. So just be careful here for a little double top action. And it's made a massive gain, massive return recently. Its dominance is back against Bitcoin as well, which is something you'll be looking at. And overall, I am kind of bullish here on the coins and the coin market. And I do think that after we broke through the 42,500, that overall Bitcoin should be moving back into the 50s again. However, when does that happen? That's for you to go through the little charts and have a look at. There's been some good trading here in the last couple of weeks. I specifically like this stop hunt trade that happened over here on the 8 hour. You'll notice it makes a slightly lower low, fully reversals, and then goes on a nice rally. That was a super trade. So congratulations to anyone that got that one and saw it. You also notice volume has gone up across the board, which is part of really, when you think about it, Dow theory's kind of idea that volume should be confirming the trend. And it's what a lot of people get stuck into me about here on the channel for the S&P 500. Because if we go to the SPX and you have a look at volume, and I don't think I've actually got volume on this chart, but if you did have volume on the chart, effectively the volume is nowhere near what it should be for confirming the trend. And a lot of people say, oh, the volume needs to be there, the volume needs to be there. And I agree with you, but you also need to see the weakness in the market turn around. And we just have not seen that yet. We've just got strength to strength to strength to strength in the generalized market, being the S&P 500, the Dow Jones, and of course, the NASDAQ at this stage. Thanks so much for watching the video, guys. Please remember that we've got CPI data coming out 8:30 a.m. on the Wednesday morning, New York time. And of course, we also have PPI data coming out 8:30 a.m. on Thursday, August the 12th, of course, New York time as well. I'll be streaming both of them here on FX Evolution channel. Please remember to subscribe and hit that like button if you're interested, and we'll see you in the next video. Bye for now, guys.